Hello everyone, welcome back to my channel. So recently I saw the news, there's a lot of discussion about inflation that will be and already being. As we are doing the grocery shopping, we may see that some of the price has been increasing, and I was considering what types of investment strategy will be resistant to this situation. The first one is invest in some raw material like energies that will benefit from the inflation. And the second one is to invest in some dividend stock. And the third one is to look at the industries that no matter the price increase or not, consumers are still gonna purchase the product. Among these different categories, the ones I'm more familiar with is the consumer product side. And I look at the potential stocks we can invest it in is P&G and Unilever. So I have previously made a video about P&G stock, so I guess today I'm gonna talk about Unilever stock. I think there's three reasons that I wanna invest it in Unilever stock. The first one is that the stocks is relatively cheaper when we are comparing with its competitor P&G. If we are looking at the P/E ratio, or we are looking at the indicator of EV divided by EBITDA, we can see that comparing with the net income, the stock price is relatively cheaper. The second reason is that Unilever currently have a higher yield comparing with P&G. It's currently provide around 3.5% of dividend, and the payout ratio is around 60%. And if we are looking at the history, the dividend has been increasing from year to year, and given that the payout ratio is around 60%, not very possible that they will stop the dividend. So that can be a good dividend stock investment. And the third reason is that if we look at the product mix, it basically includes like personal care, food category, as well as home care. So these products are people's everyday essentials, and people are very unlikely to stop purchasing this because of a price increase. Although this consumer product manufacturer may encounter the raw material increase, they also have some space to increase their product price. So Unilever has been a giant in terms of consumer product categories, and its market cap is more than 150 billion. It's the second largest consumer product companies following the number one P&G. When we are shopping at the supermarkets, it's very easier to find a product produced by Unilever. And because they make money through the volume, and they have achieved the economic of scale, so they can further reduce their costs, so they have better negotiating power over their distributors. More specifically, some retailers including Walmart, Target, and Amazon. As Unilever has become so big these days, the company have organic growth every year around 5%. And in the recent several years, the company has been achieved growth by acquiring a lot of smaller companies, especially I saw in the personal care industries. Because of the nature of the industry, they produce necessities for people's everyday life. So they are a cash cows, and they have very abundant free cash flows. So that makes the company easier to do the M&A if they find a target, and they can continue to take advantage because of their large scales. So in a word, I think Unilever stock is a very stable investment. It's not like the 10 baggers that you buy today and you would expect it 10 times in 1 or 2 years. But it's definitely one of stable investments in my portfolio. Plus, it pays good amounts of dividends, so that's also a bonus. So my investment strategy is when the stock has dropped around 5 to 10%, I will buy more. 52 weeks high is around $63. So when the stock price dropped to 57, I would like to add more positions. I think in this environment of zero interest, the Unilever stock can be also a good one that is kind of the high interest stock, given that the cash in our banking account doesn't produce that much interest anymore. That's a brief introduction about Unilever stock. What type of stock are you watching? Please let me know, and I will see you guys in my next video. Bye!